everyone, how are you? Tatiana again here. Hope you're enjoying my content and hope you're enjoying the community, as this community is really from another level, and I'm very blessed and grateful to be inside of it, and not only to be inside of it but also being able to be a coach and teach all of you. So thank you very much for everything. Today I'm going to do a trade breakdown, okay? I didn't take these live, so I'm just waiting for my FTMO account, and it just restarted the 500 to 1K challenge, so I was in the process of getting everything done, so that's why I actually didn't take these. And first of all, as usual, I'm going to share outlooks from this morning. Daily, we're inside a pullback, okay? And we're also inside a supply that caused this flip, but we're not yet well in price. So if we draw our fib tool with the swing high and the swing low, so we understand that the better prices to show will be around these areas, right? It's not that price cannot react to this demand and come down. Yes, it can. But the better price to look for shorts will always be here, right? So then looking at the 4 hour, what do we see? Price is reacting to this demand that caused this supply to fail. Price reacts to this supply with this wick, came down, and then boom. So conjunction of wicks, that's why I traced the demand here, caused this 4 hour supply, right? And we're now turning bullish. We didn't confirm this order flow yet, because we will confirm this when we confirm a new higher low, but we're now building bullish order flow, right? So when we're building bullish order flow, what are we expecting next? So we expect that price comes to a higher supply to cause a break of structure and then confirming this higher low, right? So the thing is, we tapped the equilibrium of the 4 hour leg, and we know how important it is when we tap the equilibrium, because it means that price is now in a good price to buy, right? So what I was expecting, of course, this demand could also be a target, because price could just be inside a complex pullback of the bullish order flow that it is building to then come to break the structure. But once we react to this 4 hour demand, which is also a supply to demand, supply lost control, demand took control, and we also tap the 4 hour equilibrium zone, we're building more than one confirmation that price may actually create a break of structure, because it's doing all this, okay? It's reacting to a demand that caused the failure of the supply, and also it mitigated the discounted zone of the 4 hour leg. So when we go to the 15-minute, what do we see? So this is in Team Outlooks. You just have to take a look. I share these all every morning. So when we take a look at this, what do we see? Okay, so we see that we react to a 15-minute supply and then it failed, right? So demand is clearly taking control, okay? Price is tapping the sell to buy zones, building bullish order flow. So when price does this, when this significant supply this is a doji, okay? We know how price tends to respect the dojis, and this doji was in the middle of this range that caused this very aggressive momentum. So this doji is a zone that should have at least created a reaction to mitigate the demand, right? So at least this doji should have gave a reaction to mitigate this demand over here, but it didn't. So if it didn't and it failed, this is now my demand zone that I would look for longs. So yeah, there is this high that may be protected, and we still have this supply here, so we can look for shorts here. But building the bullish expectational order flow, being this now very strong because it caused the failure of the supply, I'm willing to take longs from here. Yes, you could have taken shorts from here, but the high probabilities trades will rely on this because we're heading to the 4 hour POI. So basically what price did is, let's play price. So yeah. So I had my price alert on this 15-minute supply to demand zone. Yeah, there could have been shorts coming from here to this demand, but for me, the high probability trades at the moment would be longs from here. So what did I do? I waited for price to tap this demand, as it did, and I waited for confluences to play my normal rules. But if you take a look, yeah, there's a potential chalk here, right? But the problem is, after this demand, this supply that we can refine to this wick failed, we didn't have any opportunity to get in. Look, it failed here. So even if you took the decisional and you could look at this, price never really come to mitigate it. Look what happens next. Price just failed. So what caused the failure? If we see this failed here, right? The supply didn't hold, so demand is taking control. So at the moment, is it expectable that price can come all the way down to mitigate something significant here? Well, we can take a look at the 15 minutes. Well, yeah, it can come down to mitigate this doji, but this was a very significant supply that didn't hold. So I can take a trade from the zone that caused this failure. And why? Because when this failed, the other point that would be my target would be this, right? Because it mitigates the supply, comes to the demand. And now what is the next move? The next move is if it mitigates the supply, comes to the demand, and then that supply fails, well, my next move is it's going to come to the next 15-minute supply, right? So let's look at order flow. What happened? So basically what happened is we reacted to a 15-minute supply that didn't hold, didn't come down to mitigate the demand. So then we tapped a 15-minute supply. We came down to mitigate the demand that caused this failure of the supply, right? And now we came up and this supply also failed. What is the zone that created the failure of this supply? Well, it's right here in this sell to buy. This was the last sell to buy that caused the 15-minute supply failure. So what is the next move here? Once we didn't react off of nothing significant on the left, for me, so following the expectation of order flow, before price come to mitigate this demand over here, it needs to first come to mitigate the supply because this is order flow, okay? Obviously, we know that price didn't do this. Price came all the way down, all the way up to the 4-hour. And why? Because this is following the 4-hour expectational order flow. So if price broke the supply and reacted to the demand that caused this supply failure, well, my expectations now are that price breaks structure and mitigates something significant before coming down. So it's all aligned. 15-minute is aligned. 4 hours in line, and we know that we came from the discounted zone of the 4-hour leg. So what is the next expectable thing to happen? Price mitigates the 4-hour supply. So I would be willing to take trades from here to this supply, at least, because price could do this, then mitigate the 15-minute zone, then did this. So what are the potentials here? Well, the potentials are we can place a long here, and the next important zone is here. That's this 10-minute inside bar that price can react to. And if we see, it's already risk-free when it taps that. So yeah, I would be willing to take this trade because it's already risk-free when it taps that. And we know that 15-minute zones will take precedent over the 10-minute zones. So it's okay. Look what price did. Boom. Price mitigated this range, this sell to buy that caused the supply failure, right? And then what did it do? Let's see what happened. So there's a continuation here that caused the break of structure that you could have taken. Yeah, there is. But this is way more aggressive because price is coming to a 10-minute inside bar and price could just do this to then come down, don't come up, right? So this is a more aggressive one. If you're playing the expectations of the 4-hour and you expect that price reach the 4-hour zone, this would actually be interesting to take because if it's coming to mitigate the extreme to then come down, it would be risk-free already, right? So imagine price did this. So price reacted to the 10-minute supply, price generates liquidity, mitigates the demand to then mitigate an extreme and come down. So if price did this, you would be risk-free already. So for some, this could compensate, because if price came to mitigate something on the extreme, it would be risk-free already. And this one was risk-free already, so this one would be okay to take. So yeah, let's see what price does next. Boom, price mitigates this. You could have actually used just the wick, because, you know, there's shit in wicks. So if this reaction failed to actually create a lower low, it's because the probabilities that it will hold are smaller, right? So now if I see a failure of this supply, of these extremes, right? These extremes, either this or actually this whole buy to sell, I'll be willing to take another long. This is risk-free already. If it breaks it, let's see. Boom. Look what happened. This is risk-free already, right? The first one and the second one is risk-free already. So the max that can happen to us right now is ending up with 0. So what caused this supply not to hold? If you take a look, well, this is actually the whole sell to buy that we can refine to here that caused the supply to not hold. So it caused a failed reaction. So this is another long we can take, again, to the 15-minute zone. We can actually, again, if it's in your plan, refine it to the wicks if you'd like. 2 pip stop loss, and so 10 are there, 10 are there, and 10 are there. And look what happened next. Not only price comes to mitigate the supply, but it also, as in line with the higher time frame expectational order flow, it came to mitigate the 4-hour supply. Yep. And that's it, boys and girls. So this is actually based in flips, right? So, and these reactions based in flips, when are very corrective, they give a lot of opportunities. So this is another way of entering the market when the extremes seem not to be holding. There may be a chance for you to get in when something significant happens. Of course, I'm not playing these reactions off of 1-minute zones, as you see, right? I'm playing these reactions and these flips off of significant zones. There's a 15-minute supply over here, there's a 10-minute supply over here, and I was targeting the next 15-minute supply. So yeah, I hope you enjoyed that. These were 30 hours in barely, well, 1 hour. 1 hour and 12 minutes. And yeah, this is in line with the first trade recap I did about flips. Flips are very strong and normally hold pretty well, especially when the price is being corrective like this. Don't do it if you don't feel confident enough. But yeah, when we don't have opportunity to get in at the extreme, we may have an opportunity to get in based in flips. Hope you enjoy it. Have a wonderful day. Take care. Bye-bye.